What is up, guys? Welcome to DeFi Digs. Today we're going to take a peek at Cap Finance, which is a perpetual swap protocol that lets you trade up to 50x leverage. It is built on top of Arbitrum, which is built on top of Ethereum as a layer 2. It is super clean, super easy to use. Their whole kind of vision and strategy is to just be a very easy to use, fully decentralized perpetual protocol that anybody can use. And so far they're doing a great job. The team is anonymous. There are no fees aside from the fee that you have to pay on Arbitrum, but the protocol itself is no fees for trades, which is cool. And they have a really interesting pool feature that I will dig into once we kind of fly over the trading interface here. So let's dig into it. There are two markets that you can trade. Those are Bitcoin and Ethereum. They have a very cool chart here. This just came out, I think, in V2 or V3. They're currently on V3. The original protocol was released, I believe, in somewhere around September. So we have this cool chart. You have two collaterals that you can use. Those are Ethereum and USDC. You can go up to 50x leverage. When you choose your leverage, it's going to give you the liquidation price, whether you go long or short. And then when you go to place a trade, it's going to tell you, all the usual stuff, what your entry price is, what your margin is, the total size, etc., etc. It does not have things like stop losses or limit orders or anything like that yet. I'm sure they probably will. So if you're looking for those things, maybe hold off. I'm not a huge trader. I like to just kind of dabble. So for me, something like this that is simple and kind of easy to jump right into is pretty appealing. Love the interface and how clean it is. Once you place a order, your positions are going to come here down on the bottom. It's also going to have a history of all the trades that you've made. That is literally it on the trade section. It's about as simple and clean as it gets. I like that a lot. But this is, like I said, V3. The team is constantly iterating. They seem to be pretty active and have kind of a cool vision. So I'm expecting some of those features to get implemented down the road. Let's dig into the pool section. We'll talk about the CAP token as well, which is kind of cool. So what's unique about this is the collateral pools. So for Ethereum and USDC, each of them actually receives trader losses and pays trader profits, and also receives a portion of the protocol revenue. So that's risky. You're basically betting against other traders sucking at trading. But I find it pretty cool. So, I deposited 0.1 ETH in here on December 15th just for shits and giggles to see what would happen. I've been up to, I think, right around 0.12 and down to 0.07. So I'm now at 0.091, which is not quite 10% down. And then I've gotten paid out a little bit in protocol revenue as well. So, the market's mostly been flat during that time. I've noticed that my share tends to go up when price action is poor and ETH is performing poorly, which is unsurprising. This is a perpetual protocol on a layer 2 on Ethereum, so the people that are trading on here are probably going to be pretty bullish asset class and generally go long, which is kind of an assumption I made, and it seems to be working out that way. But it's only been about 3 weeks, so we'll see how that goes. This will go up and down based on the trader profits and losses, and then this is separately the fees or the protocol revenue that you're going to get paid out. So you do get paid in that collateral type. So if you deposit in ETH, you'll get paid in ETH, and in USDC, you'll get paid in USDC. So like I said, risky, but kind of cool, kind of unique. And then the CAP token itself is also pretty interesting. There is a fixed 100,000 supply, so it's non-inflationary, and the initial supply was just offered completely on Uniswap, so no pre-sales. Don't have to worry about token unlocks dumping on you or things like that. And then also the revenue that is paid out comes in the form of ETH and USDC. So you're not getting, you know, kind of an inflationary token that everyone's going to dump. You're getting paid out in ETH and USDC, which is super cool. The yield has fluctuated around 8 to 10%, and has stayed there, you know, pretty consistently. So pretty unique. I think it's cool. There's not a ton of information here yet as far as, you know, active trades and revenue and things like that, but they do have a lot of those metrics on Token Terminal. So you can look at revenue share on the supply side and the protocol and kind of get a gauge. You know, right now, I think there's some uncertainty in the market, so there's not a lot of action happening. But that just provides a little bit more information for you to kind of decide whether or not you want to enter into any of these pools. There's also bots on Discord and I believe Twitter that will tell you liquidations and trades that have been entered and at what leverage they're using and things like that. So something else you can use. But yeah, that's pretty much it, guys. I've been impressed with it so far. I know it's simple, it's clean, but like I said, I'm enjoying what the team is doing. I enjoy using it a lot. So check it out if you're interested. They'll keep iterating, I'm sure. But that's all I have for you. If you have any questions, if I missed anything, if I was wrong about anything, let me know in the comments. Otherwise, I'll catch you in the next one.